All right, Money Day, guys and girls. Now you're here with your host, Vel. You're learning with Vel. Today, I'm going to share with you guys a lot of information that I think isn't really spoken about when it comes to trading. I've been trading for 7 years, just over 7 years, and my journey was never sweet. I never got put in a position where someone gave me a lot of money and I made all this money from the start, and trading was just the 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 bright future ahead of me. No, okay, trading was actually quite. It couldn't be quite far from that. Okay, I'll share my stories a lot down the line, but just for the purpose of the introduction, the reason why I want you guys here today is for me to share with you guys what I'm looking at throughout the week ahead, to break down what's happening in the world and how you guys can make money from that, and just to actually explain to you guys what simple investments can become very easy for you guys to obtain. Okay, so naturally, you guys will have a lot of questions and answers. Please try to keep your questions towards the end. But because you guys are all on mute, it doesn't really matter. You guys can just type your question as and when you please, and I'll be sure to respond when it's necessary. Okay. Now, before I even go into the charts, what I want to share with you guys is, my experience for those of you who have never seen me before, for those of you who have just met me recently. I've been trading for over 7 years. I was quite fortunate enough to invest into Bitcoin. I used to live in Madrid when I was 21, 22, and 23. And the people that I worked for was just like, look, we're going to start paying you your wages in Bitcoin. I was like, fuck that. Pay me in fucking euros. I don't like that shit. They paid me, let's say I was due, I don't know, 5,000 euros by the end of the month. Paying me in Bitcoin could turn into 4,700 euros, or it could turn into 5,200 euros. It could go up or down. But because of the fluctuation at that time and at that age of 21, I was really, I wouldn't say young and dumb, but I was definitely ill-advised in terms of understanding what investments really meant, or not even understanding what they meant, but understanding what they could do for me, because I worked in the investments field. But crypto, of course, as we all know, was something that no one really knew about. 10, 20 years ago, Bitcoin was something that only Russian scammers would use. Okay, hackers. This was a dark web currency. For those of you who are old enough to remember stuff like Silk Road, Bitcoin was used for those type of purposes. So when a man is telling me he's going to pay me my wages that I've worked the whole month for in Bitcoin, I'm saying, bro, just give me the money in cash. Yeah. So when I first got involved into Bitcoin, the price was actually around 500 euros a coin. That is when they first opened up a crypto wallet for me, and then they started paying us our wages. And every month, or should I say every other day, every week, when we would go out, you would have, some of the bosses. And it's quite cool because the people that I worked for at the time was 25, 26, and I was 21. So they was pretty young, which, to be honest with you, I owe them a lot, because if it weren't for them, I never would be involved in what I'm doing right now. So essentially what would happen is we'd go out sometimes for dinner or whatever, and these guys would just start going crazy. They would literally jump up. Whoa! Okay, they're jumping, they're shouting, they're screaming, they're celebrating. They're like, Bitcoin's at 700. Yes. I'm just like, what the fuck is wrong with these guys, man? Why are they acting like that? But what I didn't realize, what I then realized, okay, what I didn't realize at the start, but I did then about maybe 12, 13 months later, was the price of Bitcoin was around about 1,800 euros a coin. And that's when I was like, hold on a minute. I remember this at 500, but I didn't pay no attention to it. When they used to pay me, I'd take my money out straight away. So anyway, only till when price got to around, like I said, 1,700 euros a coin is when I started to say, okay, I actually understand now why these guys have been shouting. Because thinking about it now, if they had 1,000 Bitcoins, for example, and the price went up and these guys bought in at 100, for example, they just made a lot of money, right? So, excuse me, based off of that being said, I got involved and I started to say, okay, cool. When they pay me my wages, I'm going to leave the money inside of Bitcoin, almost like a savings account, and just take out what I need to pay my bills and to get by. And skip forward, another 18 months later, the price of Bitcoin was above 3,400 euros a coin. At this moment there, I was quite fortunate enough to take a holiday. I come from an area of Thornton Heath, Norbury, South London. So I've got quite a few famous friends, and one of them was Stormzy. He had his first festival in Ibiza. His own, like, it's called Murky Festival. So a lot of my friends had called me and said, "Yeah, bro's performing. Let's go down there." Remember, I'm in Madrid, so these guys are traveling from UK, from London to Ibiza. Ibiza is about an hour plane ride away. So I said, "Cool, I'll meet you there." Went over there, had a whale of a time. And then when I came back, basically, one of the people that I worked for was actually a guy I used to work next to. So the two bosses that first got us into all of this, they didn't retire, but they got married. So they wanted to sit back and promote people inside of the office to actually do the work, and run the offices. So a guy that I was now working for was a guy I used to work next to, literally. And I just really used to get the vibe that he didn't really like me. You know, he would always do things to kind of punish me. You know, if I was 5 minutes late to work, he would dock my wages. He would just do a lot of stuff that made me feel like he was kind of just didn't really like me. And a lot of people felt the same in my office. They felt, well, what's the problem between you and Johnny? So anyway, long story short, I came back and they gave me a €2,000 fine for bringing tuna into the office. Yes, tuna. I was a pescatarian once upon a time, and he knew that. And I brought tuna into the office, and he was like, "Yep, €2,000 fine." At that moment there, I was on a bit of a calm down. I'll be honest with you. I looked at my Bitcoin wallet. I looked at the money that I had made, and I got the tin of tuna, slapped it on a desk, threw it around the office, and I said, "Fuck Johnny." Johnny wasn't there at the time, but all these little minions, my work staff, my work colleagues, sorry, they all basically ran to put my name on the board, and it was a big thing. And at that moment in time, I was probably wrong and strong, and I just said, "Fuck this, I'm out." I looked at my wallet. I thought to myself, I can survive, or I can go work somewhere else. So I stayed in Madrid for a further 6 months, unemployed. But because I'd made quite a lot of money with Bitcoin, it opened my eyes up to trying to understand, look, if this is what I've made in such a short space of time, there must be something that came before Bitcoin. Crypto's all cool, but it's new. What was here before? And that's when I really discovered, Forex, the foreign exchange. And I thought to myself, well, look, everyone works for money. Everyone does a lot of stuff for money. Some people risk their freedom for money, but no one actually knows how money works. And this to me was really important because at the end of the day, you'll hear a lot of people say, you're exchanging your time for freedom. And sometimes, that just might sound cliche, but the reality is when you're working jobs that you don't enjoy working, but you're just doing it to get paid, you tend to understand the value of, being able to do what you want when you want. And because of that, I just thought, cool, let me go down the road of learning more about Forex. And in the process, guys, I lost everything. I lost everything probably about 3 times over. I mean, at the time, had close to 6 figures in savings from this Bitcoin pushing up. And I thought I was rich. I'm 22, 23. I'm thinking I've made it. I'm thinking from here, the next stage is 1 million, right? And essentially, I spent a lot of money putting into trading accounts, trading with no stop loss, losing trades, losing money, which I didn't really understand. I used to place a trade. And then after placing the trade, I would just put my phone back in my pocket, continue my day, check it later on. Oh, it's down 2K. Okay, cool. Let me check it later on. It'll probably be up. Check it later on. Oh, I'm down 5K. Check it later on. Oh, shit, 7K. Maybe I should close these trades, right? I didn't have no stop loss. I didn't even know what a stop loss was. Okay. So the reason why I'm sharing with you my experience is because a lot of people that you'll find online will not tell you these things. They'll tell you trading is great, it's this, it's that, and it's all good, and you can learn it and it's easy. Don't get me wrong. Trading is just as hard as learning how to drive a car. If you don't have any knowledge in something, well, they say knowledge is power, yeah, but interest stems from knowledge. So if you don't have any knowledge in something, you're not going to be interested. I'm not interested in knowing about fucking algebra if I don't know about it. If I don't know about something, I'm not going to be interested in it. It just doesn't work. Your brain doesn't work like that. So essentially, moving past this point, I went down the road of trial and error, guys. I was just like you guys, jumping into people's telegrams, YouTube videos, watching tutorials, to the point where I realized this wasn't enough. I started attending Forex seminars. And at the time, to me, I didn't know any better. So this was all good. 5K for a course here. Cool, great. I learned information. They tell me about indicators, RSI, Bollinger Bands, all this bullshit. And I'm like, okay, great. I'm making progress. But what I found is when I was applying this stuff on the charts, I might have an accuracy of, let's say, 4 to 10. 4 winning trades, 6 losing trades. And what I found is each time I was losing, I was just losing more than I was actually making, to the point where, and this is the ultimate real, guys, I got into a position of losing absolutely everything, to the point where I couldn't even afford to continue my payments on my car. I had a car, I had a Mercedes on finance. I couldn't even afford to keep the payments up. I lost everything trading. I couldn't even afford a pint of milk. So I had to go get a job. I had to work a 9 to 5. And in the time of me working this 9 to 5, I still carried on trying to trade, putting in my money from my salary, trying to learn the craft. And it was just a real rocky road because me, unfortunately, I might be like a lot of you guys, which is where you tend to learn by taking real mistakes. A lot of people can learn by trading on a demo account. I'm the type of guy I want to learn with real money because then it's going to feel real. And unfortunately, that was just the wrong thing I could have ever have done because it put me in a real bad position. I had a girlfriend for a number of years. I was with my partner. And just to be able to know that I could no longer provide and have to go back home and tell her I've just lost everything. It's like, well, what do you mean you just lost everything? How do you do that? Trading what? Like, what? You just lost. Do you get what I'm trying to say? So I really want to paint the picture for you guys to understand that if you don't know what you're doing in this game, it's not worth it. It's not worth you listening to someone telling you just deposit £300 and they'll turn it into fucking 10 million or 1,000 or 10 grand. It's all nonsense. It's all nonsense. Yeah. What you need to be doing is thinking about how you can compare learning how to trade to how investments could pay you in today's day and age, right? You go to the bank, you open up an ISA, individual savings account, investor savings account. They give you 2% throughout the year. Now in trading, you can make 2% a day. You could make 2% a month. Even if you made 2% a month, that would still be much better than what the banks would give you over the year. But because of the day and age that we live in, people want to make things now. They want money now. People are hungry. People don't want to wait 6 months down the line. If I told you right now, guys, I have a machine, a literal money-making machine, that if you put £5,000 or euros or dollars or whatever your currency is into a trading account, you let the bot trade for you, in 15 months' time, that would make you £64,000 or dollars or euros. You can put in a lot less, but if you go on these compound calculator websites, with my bot making you guys 5% a week, 5% a week for 15 months, that would change your 5K into 64K. Now, to some people, they'll be impressed by that, but to a lot of people, they don't give a shit and they don't care because they want it now. We live in a society where we want things now. We have everything at our fingertips. We have an iPhone. I'm 31 years of age. When I was young, I had a Nokia 3310 where I could play snakes and ladders on the phone. Snakes. It wasn't about having an iPhone, FaceTiming, Deliveroo, Uber Eats, all these apps where I could just do things. I had to get up and really go outside and go and get what I needed. So to understand why I'm telling you this is because technology has improved so much so that now, guys, it's created a lust for people to want things without understanding that there's a process. Now, I wouldn't be the right type of mentor or the right type of individual to tell you guys this shit if I didn't explain to you and express how much losses I went through. If I didn't tell you guys what I went through as a beginner, that wouldn't put me in a position to be able to tell you guys how you lot can do better. So, a lot of the time I feel like with trading, people are learning scripts to sell to you guys. They want to say the perfect things. I want to tell you guys how to learn how to trade by avoiding my mistakes. If you can learn, guys, don't know what happened there. Can you not hear me? Don't know what the fuck happened there, boy. We back? Can you not hear me? Yeah, cool. Okay, cool. So the point it's quite interesting. I'll try to give you guys game when I get cut off. Such is life. But the point is, what I'm saying to you guys is you need to learn from someone who's actually gone through the things that you're trying to go through. There's no point you listening to someone giving you advice on things they have never done. I've lost so much money in this game that I now know how to make money. So it's better for you to listen to someone who's made losses so that you can avoid making those same mistakes. And today, what I'm going to be teaching you guys is, of course, some simple things, what to look for on the charts. Myself, I'm someone that likes to understand what I'm getting into. So for those of you who are the same, this is going to be really valuable. I'm going to do these type of Zoom calls once a fortnight. I'm going to share with you guys, of course, what I'm looking at for the week ahead for my month, my Market Mondays. But what I'm also going to do, guys, is interact with you lot, okay? When we think about finance, we have to understand the serious implication of what that means. Because unfortunately, guys, whether you're, a man or a woman, whether you're married, divorced, whether you have kids or not, money is something that we all need. Unless you live in the Amazonian forest with no phone signal, money is something that we need. You can't even get phone data without buying money. okay, without using money. So I need you to understand just the smallest thing sometimes requires money. And that's the reason why understanding how money works can put you in a much better frame of mind. When we think about trading, a lot of you might be thinking more so of the fact that it's about buying and selling and, using this indicator or using that to tell me when to buy, when to sell. But when we have a look at what's happening in the world right now, for example, all of this unfortunate war that's taking place, these things all have a huge knock-on effect to the markets. From an economical perspective, this is very important. It might not be important to your daily life because you're, of course, working, you're living, you got your family, you're not, your house ain't getting bombed. So I get it. The information might not be as, important for you. But these things all have ramifications that take place over a gradual amount of time. So when we understand what's happening right now, what has happened over the past 10 years, you've had, wars in Sudan, Ukraine, all across Africa, really. You've had wars taking place right now, of course, with Palestine. You've seen so much things that take place, guys. And some of you might really think, well, okay, that's happening and we can't do anything about it. So why do I need to take note on what's happening? Well, if you're trying to trade, if trading is something that you want to do, then understanding these things are important because in actual fact, the world, these elite government organizations, they don't do these things for no reason. They do these things for power, which means for resources, and that also means money. So when we see these wars taking place, naturally this affects the markets to push up. Naturally, okay? I'm not saying that because we know there's war taking place, we should just be buying gold and buying oil. No, but it means that we should be looking at the markets with a bullish mindset. We shouldn't be looking at selling something if we know that right now the markets are going to be bullish based off of the fact that when economies perform poorly, okay, commodities do very well. Gold, oil, silver. Now, before I even go into the charts, I'm going to give you guys a free nugget for those of you who probably don't have the patience to stick around. If you go onto coininvest.com, normal coin, yeah, COIN, coininvest.com. I've got no affiliation to these guys. Coininvest.com, you will be able to purchase gold or silver coins on there. You can purchase kilos, you can purchase ounces, you can purchase grams. It's going to be very important for you guys to get a piece of tangible, okay, tangible investments, tangible assets. If you purchase silver, silver's around $31 an ounce, okay? Gold is around $2,650 an ounce. So there's a very huge gap in the difference. For those of you right now, I'm sure everyone here has got $30 to their name. If you haven't got $30 to your name, then you need to evaluate your life and say, hey, whatever I'm doing, it's not working. I need to do something different or I need to go harder. Okay. We should all have $30 to our name. So we should all be looking at coininvest.com. There may come a time, guys, there may come a time where these assets might become even more valuable in a sense where, look, 20 years ago, we had cash. We had a £50 note, which was cash, right? Now you've got plastic money. Yeah. And in some places, I mean, in America, they've actually passed a bill to now take out the $100 bill out of circulation. So it's only really going to be a matter of time before they actually look to stop using physical money. And that pushes us more into the realm of digital assets, digital currency. So you have to understand, guys, for any, unforeseen circumstance, if something happens, at least you guys know, look, silver, gold, these are things that always rise with inflation. Okay. Gold, a gram of gold, £100 worth of gold 10 years ago, okay, is the same value 10 years ago as it is today. Why? Because it rises with inflation. A lot of you are asking me what's the website. I'm going to write it in the box here. It's coininvest.com. Okay. Coininvest.com. So going back to it, guys, that's a website that I've used over a number of years prior to lockdown and throughout lockdown. And what I was doing, guys, is I actually developed an investment strategy, which you guys can follow as well. At the end of each week, I was always withdrawing 20% of my profits. So if I made $1,000, £1,000, I'm going to withdraw 200 and I'm going to buy silver with that. The reason why I was buying silver might have been worth around £20 at the time. Me personally, I would like to buy something that's going to give me more capital appreciation. If I purchase gold at, $1,000, for example, I would need gold to go to $2,000 in order for my money to double. Right? It's going to be much more realistic for silver to go from $20 to $40 than it would be for gold to go from 1,000 to 2,000. So based off of that, I hope you guys can understand that silver is an investment, it's an asset that we should all be owning at the very least. Silver has some hardcore tangible reasons as to why it is a necessity in today's world. It goes into the production of all the phones that we use, lithium batteries, ammunition. It goes into a lot of things that's needed in the world, which means it will always be a reason for the price of silver to be going higher. The website, I've tagged it on the comment section. I don't know if I can tag tag this thing. I don't know. No, maybe I can't, but it's coininvest.com. Okay. Coininvest.com. That is the website, guys. Can I tag it? Pretty new on this Zoom thing. No, can't tag it. Cool. Coininvest.com. That's what you guys want to be looking at. Okay. Now, I'm going to share with you guys my screen. Let's go into this. What screen is it? Screen one. Okay. Okay. I know Zoom's got some cool features. Can you guys see my screen? Yeah, should be able to. Yeah, you should be able to. Okay, cool. So naturally, right now, I'm looking at oil. Now, before I go into this, we're going to move away from looking at the charts. And what I'm going to do is I'm going to show you guys a website that I use, which you guys should all be using. It's like the Facebook of the financial world, okay? This is called investing.com. Some people might use similar websites, Forex Factory, for example, but investing.com is more so covering the whole financial spectrum. Now, a lot of you may or may not know that when you look at the world of investments, a lot of these things are connected to each other, okay? What do I mean by that? Well, the stock market has a significant role to play inside of the Forex market. And the reason being is because when you purchase, for example, the latest iPhone, you're going to purchase that with physical currency, right? The iPhone 16 just came out. You guys will purchase that with your pounds or your euros or your dirhams if you're over here in Dubai. Yeah. When you purchase that in Forex, when you purchase the phone in currency, excuse me, at the end of the month, at some point, at some time, I don't know exactly when, but Apple will send the millions of dirhams that they've made for this new iPhone 16 over to America. And when they do that, they're going to convert the cash from dirhams to dollars. That is Forex. Now, there's two benefits to that. One is that it's going to boost the strength of the United States currency, the US dollar, excuse me. Okay, it's going to boost the strength of the US dollar, but it's also going to boost the strength of the Apple stock, right? Apple on the stock market will also go up as well. Now, every quarter, you can see here it says US aerospace and defense stocks Q3 earnings preview. I don't care about the aerospace and defense stocks, but this here, Q3 earnings, that is something really important. The reason why it's really important, guys, we have a tab at the top here which says earnings calendar. What this is going to do for you guys is it's just going to make your job easier. This might be a lot of talking that I'm going to be doing now, but I promise you this. The reason why I lost so much money in trading is because I just thought that trading was about looking at the screen. It was about technical analysis. Now, a question I would ask you guys, don't you, it's more so observation. Some of you might be really good at technical analysis. Some of you just might be fundamental based, right? But it's quite interesting that when you have your technical analysis lined up and then the news comes out and the news does exactly what your technical analysis predicted that it would do, it becomes quite interesting to think, well, how is my technical analysis lined up with the fundamentals? And vice versa. How is the fundamentals lined up with the technical analysis? What that really says to you is either one of them doesn't make sense. One of them is bullshit, or they're both bullshit, or they don't really matter. Think about it. If you've got technical analysis and you're saying, yeah, I'm looking to sell this, I'm going to sell it from here, and it comes right down to where you wanted to sell it from, and it goes there, boom, drops down. But it only happens at the moment that the news that the news gets released. What does that say to you guys? Well, that says to you that the news is an excuse to push the price, number one. Okay, if the markets was moving sporadically every day, viciously up and down, people wouldn't trade the markets because it would be seen as too unpredictable. But what happens in this very instance is the news comes out, the markets moves in the exact same direction. So what does that tell you? that tells you that if you didn't know about the fundamentals and your technicals were on, if your technicals were on job, if your technicals were perfect and it banged off for you and it gave you the trade, the winning trade, that says to you that there's a deeper meaning behind the technical analysis and the fundamental analysis. So all we can do as individuals is read. Unlike when we was in school, I used to hate, going home, doing homework. They would tell you, the teachers would tell you, the answers are in the book. You just have to read the book and it's going to give you the answers. Well, this is the exact same thing. All we have to do is read. And when I first got into trading, I didn't read. I didn't want to read. I just thought, cool, I've got indicators, I've got this, I've got that. These things can tell me, and I'll be great with that. Now, what I'm sharing with you guys is quite simply the way the financial markets work. And that's the most important part here. When you think about trading, you have to understand trading is participating in a global financial exchange of currency. It's not about you looking at GBP USD thinking, is it going to go up? Is it going to go down? There's a lot more to it. So when we have a look at the stock market, how you guys might be wondering how this has any part to play in the Forex market. Well, you've got here the earnings calendar. Okay. This tells you the earnings reports of each company listed on the stock market. Some companies are insignificant, some are very significant. For example, we have here Goldman Sachs. Goldman Sachs, for those of you who don't know, they are one of the largest investment banks, one of the largest investment corporations in the world. Okay. And they have a very significant part to play in the actual direction of what the stock market goes. They're associated to the Dow Jones, okay, the US 30, which some of you may know it as, or Wall Street 30, which is formerly known as. And what that means, guys, is when Goldman Sachs pushes up, US 30 tends to come up with it. Goldman Sachs goes down, US 30 tends to go down with it. The reason being is because these guys are the ballers on the stock market. These guys are Man City. These guys are the biggest and the baddest company on there, meaning the amount of money these guys make, if their earnings reports, as you can see here, it says a forecast of 11.81 billion, right? If their earnings reports, the market cap is 170 billion. If the earnings report is positive, meaning what this is basically saying is they're predicted to have the earnings of 11.8 billion, right? So when the actual revenue comes out, if it's less than 11.8 billion, this would be bad for Goldman Sachs, which would present a negative response. If it's good, if the result is above 11.8 or exactly 11.8, then that would be positive, which would present a positive reaction for Goldman Sachs. These are small things that you're not going to look at, you're not going to find on YouTube. People aren't going to go into the secrets or the depths of how they really make money. And it's sad because it begs the question, do people really know how to trade? Because if they did, why wouldn't they tell you that? Once upon a time, people that I was, learning from, quote unquote, told me that we was robbing the banks. They told me when we jump on the charts, we're robbing the banks. That can't be any further from the truth. We're not robbing no bank. We're jumping on the same train as the institutions, and that's how we're making our money. Because the institutions are using us, they're using hedge funds. If I'm a if I'm a multi-millionaire right now and I decide to open a hedge fund, the financial institutions, they want my money too. They don't give me a pass because I've got all this money. We want your money too. So what you tend to understand is the targets in this market are us. It's the minority. It's everyone that doesn't have a seat at the round table. So when we look at these results, these reports can help us. These reports can help us understand if we should be looking at things bullishly or bearishly. Okay, now Goldman Sachs on the stock market is called GS. The other one is going to be JP Morgan. But I came over to this table here to show you guys that the earning reports is going to be important. So for those of you who maybe trade or who don't, or who are thinking about trading the stock market, whether it's the NASDAQ, whether it's US 30, whether it's the S&P 500, what you should do, what I decided to do was I said, okay, cool. Let me research. And it's so funny, guys, because when I first was doing all this research, I had to manually do it. Now we can just use ChatGPT, right? So what you guys need to figure out is the strongest performing companies on each market, the strongest performing companies in the NASDAQ, the strongest performing companies in the S&P 500 and on Wall Street. Once you can find out which companies are the strongest performers, all you need to do is monitor their progress. If these guys are bullish, then guess what? The stock market's going to follow them because these guys are the significant movers. These guys, if they're bearish, the markets are coming down. If they're bullish, the markets are going up. So it's really important to make not necessarily shortcuts because they're not shortcuts, but it's important to do thorough research because that makes my job easier now. Now I don't need to look at no technical analysis. I don't need to go into detail and do all this stuff. You've got apps on my phone. I've got things where I can go on a news website. I can read a Goldman Sachs news article, and it can just read. It can read me the words without me having to read it. Or I can go on Bloomberg and I can watch a video and it can tell me about it. Either way, it's making my job a lot easier. So I need you guys to understand it. This might seem boring, but you have to question and think, well, what do I want out of trading? Do I just want to make a bit of side money and I want to make side money, for the next month or two? And I don't mind if 3 months down the line I'm doing something else. Or do I want to say, hey, if I'm going to do this, I want to do it properly. I want to make sure that in 6, 7 months' time, I've actually made, a considerable amount of money in this game, and I can still do that for the foreseeable future. If that's the case, then you want to make sure you do things right because you may not have the minerals like how I had. Like I told you, my car got repossessed. My brand new Mercedes, I had it for about a year. Did I have it for a year? I had it for a year, maybe a year and a bit, and my car got repossessed. And if anyone's had their car repossessed here, you'll know they don't just come and take your car straight away. I was struggling for about 4 months after I lost all this money just to get by, really. Okay. And in that process, Barclays said, hey, we want your money. And I'll go one step further. I'll go one step further and really break it down so you guys can understand the pain. I need you guys to understand the pain. If you understand the pain, then you can also appreciate my pleasure that I'm living right now. Okay. So at the time when this happened, there's a thing that you have as a man. It's like your first watch. You never sell your first watch. I had a Rolex that I bought when I used to work in Madrid. And it was like, it meant a lot. It meant a lot because it was my first watch. So based off of that, I was always like, no matter what condition I'm in life, I'm never going to sell my watch. But it was getting to a point where these guys were going to come and repossess my car. So now I'm like 4 months down the hole. I owe them money. I owe the money for my insurance. And don't get me wrong, I've been making money working a job. I started to pick up a job as an estate agent, but that money I kind of needed to live off. I needed to use that money to get to work and to pay my, daily expenses, you could say, and then try to make some more money trading. So I was kind of just pushing money into trading, saying, hey, I can make it back. I can make it back. I'm 75K in the hole, but I can make it back. And, it was a mug's game because all I was doing was just losing every single time. But essentially, it came to the day where I said, cool, I'm going to pop down to Hatton Gardens. I'm just going to find out how much they're going to offer me. And I think I need to sell my watch. Now, at the time, this was like a very, very heartbreaking thing to do. I had to kind of inform my girlfriend of the situation, tell her how mad life had got. And in that process, what I'd done was I basically went down to Hatton's, I spoke to the jeweler. They was like, yeah, we're going to give you 5 grand for your watch. I probably spent on, there's no probably about it. At the time, I bought my watch for around £12,800. These guys was offering me less for my watch. Fair enough. It was, 3 years later of me having a watch, but nonetheless, I'm thinking they're not even giving me half price. So I've gone to each shop on Hatton Gardens trying to see if they can give me at least half price for the watch. No one wants to. 5,000 is the max. So I said, okay, cool. I'm gonna have to sell the watch. My girl was there. She was just she felt stressed for me. Okay, but what actually happened is I sold the watch. They transferred me the money. I went downstairs into my car, called up Barclays and said, hey, I got the money ready to pay you lot. They said to me, Mr. Napoleon, it's too late. Contract's closed. We're going to repossess the car. I said, yeah, no, but I got the money. I got the money to pay you right now. I can pay you right. No, it's been closed. It's been cleared. That's it. We're going to take the car. So it was kind of like a double whammy because not only was my car going to get repossessed, I also just sold my watch, which meant a lot to me. And I didn't even get nowhere near what I bought for it in the first place. So again, why I'm telling you this is because you have to understand, despite all of these things happening to me, I still stuck in this thing. I still stuck in trading. I still said to myself, hey, one day this is going to pay off. This is going to make sense. I just got to see it through. I used to do a lot of things in the past, which, maybe a lot of you can relate to, but I decided to focus on trading. And alhamdulillah, now I'm here where I'm at. Okay. But in that moment, things weren't easy. So I'm telling you this as a gentle reminder to say, hey, if you're thinking about trading and you're not going to go through the proper motions that's necessary to get to the where you want to be, then don't waste your money. Don't waste your money if you're gonna give this a half-hearted chance. If you're gonna jump on the charts here and there, place a couple trades and hope for the best. If you're not prepared to research and do information, if you're not prepared to research, simple things, guys, simple things. You probably spend more time on social media than you would spend researching shit. That's the actual harsh reality. Go check your screen time, see how long you're on your phone for, and then you'll be able to see actually I could spend at least half an hour reading something online to help me better understand how finance is working. So with no further ado, I'm not going to ramble on too much. I want to go over to the economic calendar. Getting hot in here. Let me put the AC on. Woo. Yeah. All right. So the economic calendar, this is going to tell me each week what's happening on the charts. This is going to tell me each week what's happening in the financial markets. Okay. Now, this week we can see we've got Canada having a Thanksgiving Day, which is going to take place on Monday, tomorrow. We've got CPI for the pound. We've got CPI for the euro. We've got the interest rate for the European Central Bank. This is really important, guys, because every single month the banks are releasing statistical reports that pretty much tell you if their economy is growing or if it's decreasing. Okay. And one way to understand how the economy is going is by looking at the interest rate. So the interest rate's either going to go up or it's going to go down. Okay. If it goes up, it's going to be positive. If it goes down, it's going to be bearish. Okay. There's more to it than that, but that's just kind of the basis I want you guys to understand. If you get more value for money, who's going to complain? If you went to the banks now and they gave you 10% on your savings account, you wouldn't complain. You wouldn't complain. That's 10%. That means you invest 10 grand into a savings account, they're giving you a grand a year. You're not going to complain. But if you was going to get a mortgage and they told you, hey, your repayments is 10%, 10% interest, you'd say, whoa, that's a lot of interest. So it's a double-edged sword. And really what you tend to understand is the interest, or should I say, any of these reports, or mainly the job of a central bank is to keep the value of their currency low. Their jobs are to look out for business. These governments, these world organizations, they're not involved in trying to help the likes of you and I. They're involved in trying to entice investors, foreign investment, to invest into their country. Dubai is a classic example. They have a lot of foreign outside investment come to Dubai. They build all these buildings. They do this, they do that, blah, blah, blah. That's good for the country, right? Because they are enticing a lot of foreign investment. So that's the exact same with countries that we live in. Doesn't matter if England is miserable, doesn't matter if the weather is shit. Their job is to entice foreign investment. Hence the reason why if you go down Knightsbridge, you'll see Knightsbridge is filled with a lot of Arabs, right? You'll see Harrods there. All of these things that are built is because it was enticing foreign investment to come into the country and build these type of things, open these shops because it can bring more money into the circulation of the economy. So going forward, we have the jobless claims for the United States. We also have the ECB press conference, and then we have the crude oil inventories on Thursday. Now, these events just simply mean that they're going to have a high impact, which means that we can expect to see some drastic changes potentially in the market. And that's really only taking place on Thursday. So from Monday to Wednesday, the markets may not move or they may move quite slow. But nonetheless, I'm going to be sharing with you guys what I'll be looking at. Now, I'm going to go into oil and I'm going to go into oil just quickly based off of the fact that I pretty much did express, I shared this with my VIP members. So for those of you who aren't in there, you simply just need to upgrade your subscription. Okay, get a VIP membership. You'll get access to this, to some of these trades that I send out. Okay. Now, oil is quite simply what we've just spoken about. Okay. If an economy is performing poorly, commodities will do quite well. Because right now you've got a lot of war taking place, the price of oil is going to go up. That's inevitable, just like how gold is going up. The reason why gold is going up, the reason why the price of oil is going up is because these things are commodities, guys. Just because we know that it's going up doesn't mean that we're going to buy it straight away. We have to, of course, find our areas that we want to buy from. And of course, with oil, we was able to wait for price to make a new high. Once it done so, it came back down into an area, 70%. It came down as low as 79%, which was even better. I didn't take the trade there, but I sent the trade out to you guys. Eventually, once we was hovering around here, we've hit our first take profit target, and we're sitting in this trade, which we may end up holding for maybe a number of weeks. Okay, touch wood. Reason being is because oil came down so much over the past few months that now with what's going on, there's no reason for us to think that oil can't come up, clear some liquidity areas above here, and really come back towards $100 a barrel. Okay, once upon a time, I want to share with you guys the price of oil was as high as $150, $147 a barrel. That is very high compared to where we're currently at. Okay, $150 a barrel. We're at half price right now. We're half the price of where oil once was. So, there's reasons for oil to go up. Of course, we do understand that, when we look at technology, they are looking heavily into renewable energy sources. So it does, of course, mean that with all these electric cars that are coming out, oil is slowly coming out of, it's not coming out of production, but it is something that, of course, governments are trying to reduce people's emissions on how much oil or how much consumption that they are actually using with oil. Okay, Tesla is a prime example. They're bringing out self-driven cars. They're bringing out electric cars. Companies like that is, of course, making it really hard for other companies to really sell their petrol-based cars, which is the reason why these brands like Mercedes and all these other brands are, of course, introducing electric vehicles too. So we're not going to sit here and say gold oil is going to make a new all-time high. Probably not going to happen. Maybe it does, maybe it doesn't. But what we can expect is that prices should at least push higher to grab some liquidity above. And the target area that I actually have is the minus 14%. This is my first target area. When I'm swing trading or anytime I'm really trading, I shared this with you guys last time. I'll share it with you again. Take a screenshot of this here. These are my Fibonacci numbers. These are the golden numbers, ladies and gentlemen. These numbers will make you money. They make me money. They'll make you money. Take a screenshot of those. Once you've done so, it's better. Once you've done so, cool. We'll move forward. So the first area I'm going to be expecting price to reach is the minus 14.6%. But look, on a daily time frame, this could take a number of days. It could take 7 days, 8 days, 10 days, 50 days, or 2 days. Who knows? But what I do know is that patience is key. When you get into trades, guys, you have to understand, I'd rather press a button once and know that over the next 25 days or 10 days or 7 days, I'm making money than have to press the button every day and get into a trade. I don't like to trade every day. I don't like to sit here on the charts and be like, oh, no. I'd rather press the button once, okay, have a look at my phone every other day to say, yeah, I'm making money. But I only want to press the button once. I don't want to get into the trade today, close it, get in another one, close. I'm not a scalper. I don't want to do that. Why would I want to scalp and put myself through more heartache, more risk? I've scalped before in the past, and it hasn't put me in any better position than I'm in today. So I tell you for free, scalping is something that if you've got the time to do so, each to their own. I'm never going to downplay someone else's hustle. But what I'm going to say, guys, is once you understand the bigger picture and how the markets are being affected, you don't need to do those things. Because we know that the war is impacting the price of oil, the oil is going to go up. So why would we get into a trade today and close it in an hour's time and then get into another one tomorrow? We just get into a trade, into a buy where it's at an appropriate area in the market, and we let it do its thing. It's very simple. There's quite a lot of questions. I can see I've got 10 unread messages. Let's go into some. Where can we buy silver? So for those of you who don't know, silver is on coininvest.com. Okay. I'm going to check these messages after. What I want to do is share with you guys the significance of JP Morgan and Goldman Sachs. I told you guys, but I didn't show you guys. Now, this is my watch list on the right-hand side. Some of you might think, fucking hell, that's quite a lot of pairs. If you guys are new to trading, you should only be studying two pairs maximum. You don't need to study all of these pairs. But what I've done is I've created a catalog of pairs that pretty much are correlated to each other. Okay, now if I start from the top of the list, I've got two that is the utmost important when it comes to looking at the currency market, especially the United States dollar. This is the US government bonds and the US government bond yields. Okay, the bonds are the Mac Daddy. For those of you who are my students, you guys will know. So if you don't know, then I'll pretty much give you some free game and tell you guys if the bond market, which is this one, if this pushes up, dollar's going to follow it. If this pushes down, the dollar's going to follow it. I'm not saying that it has to happen simultaneously like that. No. But if the bonds push up, I guarantee you there will be a lag behind where the dollar will start to push up as well. It's exactly how it goes. It's how it will always go. The bond market is the most longest, oldest traditional investment that there is. So the bonds are very important. If you guys will tune into Bloomberg TV, it's free on YouTube or on your television. If you've got, I don't know, cable or some shit, you'll hear these guys always talking about bonds. Okay, bonds and bond yields are inverse, simultaneously inverse. If one's going up, the other one's going down. Okay, this is really important, guys, because if the bonds go down, you'll see over some time. We're on a daily time frame here. Okay, you'll usually see a pattern. So if I have a look here and show you guys, you can see this is coming up, and you can see this going up with it. Now here's the problem. Okay, right now we see the yields are going up. Okay, the yields are going up and the bonds, and the dollar's going up with it. This is what you call, guys, diversion. This is real diversion, not an indicator telling you that there's a diversion taking place. This is real time, real life diversions. Okay. And what do I mean by that? Well, a classic example for those of you who are new to trading, 5 years ago, if the stock market was going up, gold would be coming down. In today's day and age, when gold goes up, US 30, the stock market goes up with it. If we look at the stock market, it's at all-time highs. Yeah. That's the S&P 500. This is US 30. This is the NASDAQ. They're all approaching all-time highs, or they're all simply pushing higher. Gold is doing the same. If you go back 6 years, go back 4 years, this wasn't happening. I used to be able to go on my phone and press buy for gold and sell for US 30. You had to be there to witness what I'm saying to you. And I really hope you guys can listen and believe what I'm saying, because to me, it shows me everything that I need to know about the fact that the markets are being manipulated, because I'm now seeing something completely different to what it's always been. It's like you've always known, 1 + 1 to equal 2, and all of a sudden 1 + 1 equals 3. And you're like, well, 5 years ago, that weren't the case. Why is it the case now? And then you start to think, okay, something's happening here, because clearly people are just believing this shit, but this ain't actually what is the case. So the bond market is meant to be a reflection of the United States dollar. If this goes up, this is meant to replicate the strength of the dollar. The currency market will follow the bond market, guys. Remember, I'm telling you this. If we have a look at on the monthly chart here, you can see on the monthly chart that this has been bearish this month. Of course, the monthly candle wasn't finished. We're really in the first, just about to approach the second week of October. Okay, it's going to be the 14th of October tomorrow. So it's going to be the second week. If we have a look at the DXY, the DXY has been in this consolidative range. And right now, this candle is bullish. So it'll be really interesting to see if this candle closes bearish on the bond market, how we actually end with the dollar. Does this end bullish, or does this end bearish? When we look at this right now, for those of you who have watched my previous Market Monday episodes, I've told you guys that I want price to actually come up to this blue line, like so, and then I want it to come down. I would like a reaction lower. Okay, so I've got a note here for you guys which says if bond prices goes up, that means interest rates have gone down. Okay, if bond prices go up, interest rates have come down. Okay, now if you go into the yields, if bond yields are connected to inflation and interest rates, what does that mean? That means, guys, that the inflation and the interest rate is the same thing. Unfortunately, it's the same thing. There's two separate categories, but they work hand in hand. Okay, inflation is pretty much the same as interest, because a cup of coffee might have gone up by, let's say, 20p over the past year, right? But that's due to the fact that the cost of living costs more, and also the interest rate has also gone up. So it's the same thing. There's just two different categories. A lot of the time, you guys might be quite confused with a lot of the market terminology that you're hearing. If that is the case, then simply go over to Investopedia, and you guys can type in stuff on here like, where's the search box? Up here, top right. Let's move the camera. If I type in up here, what am I looking for? Treasury bonds. Okay. Treasury bonds, what's the difference? If I click onto this, this will tell me and give me a breakdown in layman terms, guys, what a bond is. Any investment that I'm not sure of, if I need to understand it, if I want to understand how it works, go onto Investopedia, type it in, and it will show you guys. Okay. heading back over to the charts because I don't want to take up too much of your time talking about bonds and bond yields. I'm going to go over to Goldman Sachs. Okay. Goldman Sachs, as I told you guys, is one of the largest companies on the stock exchange in terms of the power that they have. Goldman Sachs and JP Morgan. Okay. If these guys are bullish, when we have a look at US 30, we're seeing the exact same thing. Okay. If I go down into, like, let's say the daily time frame, that might be a bit better for you guys. On a daily time frame, Goldman Sachs was bullish. And then we can see here JP Morgan was bullish. Guess what happened? US 30 was bullish as well. Okay. If you're trading US 30 and the stock market is about to open and Goldman Sachs is flying down, but US 30 is going up, I'm telling you, US 30 is going to turn around and go down. These are simple things that will help you to get paid. So the reason why my list might look so detailed in terms of there being so much stuff on there is because they're all connected to each other. If I understand what's happening in Goldman Sachs and JP Morgan, I don't really need to make any technical analysis on US 30. Of course, I need to identify where I'm going to buy or where I'm going to sell from, but I don't need to sit there and study it and say, okay, the technical analysis is really going to help me here be profitable. No, it's going to be the fundamental aspects with common sense and also with historical data proving on how these things react. If we understand that when we look to the left, we can see all this historical data and we can use it. A lot of you don't go back to as far as you can on maybe the daily or the weekly or the 8-hour time frame. I've really sat down in front of a screen, guys, and gone back as far as I can on a 1-hour time frame and marked out every session candle to the point where I've fallen asleep. I've sat in front of a computer for 6 hours on holiday in Mexico. Yeah, so that's the worst place to do it. I weren't at home on a rainy day in UK. I was in Mexico, sunshine. My girlfriend wanted to leave and go out and do this and do that. And I was like, yo, I need to fucking learn this shit. I need to really feel confident to say, hey, next time price comes here, I'm going to buy. So that's what it's going to take for you guys. You have to go through the hours. They say 10,000 hours before expert or some shit like that. It's true. The more hours you spend in something, the more you're getting to know it. The more you get to know someone, the more you're able to have better conversations, the more you're able to make better judgments. Okay. So another hack is going to be coming down and looking at Bitcoin. A lot of you are quite always interested in me sending out Bitcoin trades. I sent out a Bitcoin trade this week. It was a sweet one. It came up here. We was quite profitable with this trade, very profitable, to be honest with you. In some cases, you've seen people inside the channel make over £2,000 in profit. So the Bitcoin trades are always going to be nice. But guys, the misconception that a lot of you might be wondering is, well, Bitcoin is very volatile. So actually, I'm not going to take any trades with that. I'm going to stay away from it. If it's not volatile, you're not making no money. You need the markets to be volatile. You need the markets to be volatile. That is how the markets move up and down. The only way the markets are moving up and down is the volatility. So because of that, that helps us understand where we should get into the market and where we should exit the market. Right now, we're in a position where we haven't had a new low and price has just about made a new high. So what I would be looking for is Bitcoin probably to come down a bit more, feel some of this imbalance, and then push higher. That's what I would be looking for on a weekly time frame. If we have a look here and we go blank canvas quickly, we can see the price action here is pretty bearish, guys. We've had lower low, lower high, lower low, lower high, lower low here, lower high. So we could now be coming down to make a new lower low off of the weekly time frame. This is what could potentially be happening. So we're not really in the best position to buy this or to sell this. We had a trade, it was great, but sometimes it might take us 4 to 5 days to think about taking another trade because we need to wait for a confirmation. We need to wait for the technical analysis. We need to wait for some maybe outside information that helps us better understand this. And the outside information that I'm going to give you guys is the Bitcoin Trust. I've told you guys this before. I will sing this until the cows come home. Bitcoin Trust. For those of you who are aware, Bitcoin has an ETF listed on the stock exchange, right? The NASDAQ, okay? So each day before the New York Stock Exchange opens, of course, you're going to have a orange line, which is going to represent the pre-market data, which means the out of hours trading. Okay. And you're going to be able to see, let me break it down to you guys first and foremost. You see, over the weekend when we can't trade these stocks, or we can't trade currencies because the markets is closed, the banks still trade. That's the reason why when the markets reopen on a Sunday evening, there's gaps, because out of our retail hours, banks and institutions are still trading. Okay, so when we see on Monday tomorrow, pre-market pre-market means just simply before the stock exchange opens. Okay, we're going to see that there's going to be a line here which is going to show us if we can buy. It's going to show us if this is above 35.94 or below 35.94. What I'm saying to you is this: once the market opens, if price is pushing up in one direction hard, if this is pushing up, then Bitcoin's going to go up. If this is pushing down, Bitcoin's going to push down. I'm not saying this simultaneously, okay? But I'm saying if this is dropping down like this here, okay, I'm telling you for a fact, Bitcoin's going to come down, okay? And we can better prove that theory as well. What I'm going to do here, I'm going to show you guys here. This says the 5th of August. Yeah, 5th of August. Can you see the date here at the bottom? 5th of August, 24. We go over to Bitcoin. Guess what? 5th of August 24. Bitcoin dropped the same day that we saw the same day we saw the drop on a Bitcoin Trust. Bitcoin dropped almost 16%, guys. Almost 16%. Now, when we look at the Bitcoin ETF here, it didn't drop 16%. Then it probably didn't drop anywhere near that. Let's have a look. Okay, we came down 10%. So a 10% drop led to a 16% drop with actual Bitcoin, BTC USD. So again, everything that I'm sharing with you guys is proven, it's tested, and it's things that a lot of people tend to keep close to their chest because they want to sell it to you. Take this shit, practice it, see how you get on. Of course, if you guys are inside the Discord community, which you guys should be in there now, okay, you guys are more than welcome to share your analysis. You're more than welcome to ask questions, and you're more than welcome, of course, guys, to jump on these live streams further down the line. Use my YouTube channel as a reference to maybe look at the education on there, and then, of course, ask me the questions based off of what you may have found, and I'll do my best to answer the questions for you guys in a timely manner. Okay. So moving past that, I'm going to show you guys silver. I told you guys silver is at $30 an ounce. It's actually at $31 an ounce. Guys, if I show you guys the price of silver right now is at 31, but the highest it's ever been was around $50 an ounce. $50 an ounce. Everyone should have $31 right now. Let me go on this website. Should I go on? Yeah, let me go on the website. Coininvest.com. I don't get no commission from these guys, so I don't know if I want to just post them up on my shit, but let's do it. Coininvest.com. Forget all of that. Yeah, this is the website. Who's that, Charles? This is the website you can use, guys. Okay, I've bought many silver bars on here. I've bought gold bars on here. This is the website to use. Okay, they will deliver it to your house. They will ship it internationally wherever you are. You will have to pay importation tax, so just be aware of that. It's something that they don't actually declare. So when I purchased at the time, a lot of silver, it came, and then I got a email from what are they called? It's not FedEx, it's the other one, the brown one, UPS. And they was like, oh, you've got customs tax, this, that, and the other. And I was like, who the fuck is this? What do you mean? I thought it was a scam. And then a week had gone by and my shit still hadn't been delivered. And I was like, okay, maybe this is to do with that. And it turned out it was. And I had to pay the importation tax in order for me to receive it. And then it came and it was fine. And now I've got it in my safe. So it's not a problem. But definitely buy some silver, guys. £30, $30, in pounds is probably around about 25 pounds. That can go a long way in a year's time. If you keep at the end of each week compounding your accounts, if you guys are in my VIP channel, or even if you're in the free channel, try and do this thing throughout this next week. Try just follow my trades and your trades only. Try limit yourself to the outside noise and put yourself in a position where at the end of this week, you're saying to yourself, on Friday, I'm going to make a withdrawal for 20% of my profit, no matter how big or how small it is. Because the problem in today's day and age is we look at 10, 20 pounds and say it's not a lot of money. But if you can make 10 pounds a day, 20 pounds a day, guess what? If you compound that over a 12-month period, over a 6-month period, the money adds up, guys. You have to understand, it might not seem like it's a lot of money, but in 6 months' time, you're still going to be here, God willing. So why not just do something that's going to benefit you? If I'd been saving, women are quite good at this. Women are quite good at saving on a daily basis, on a weekly basis, to the point where years down the line, they've got a whole bunch of savings because they actually said, you know what? I don't play PlayStation. I don't go out and play football. I don't go out and do rugby or this or that. So I just save the money. And now they've got money to actually invest and look after themselves. Guys, we live in a day and age where most of you probably do not have a pension. If you have a pension right now, tell me. Just drop a one in the chat if you have a pension. Chances are you probably don't. I don't have a pension. Let's see. Put a one in the chat if you have a pension. Put a two if you don't. Let's make it quick, guys. If you have a pension, cool. If you don't, drop a two. Okay. Guys, you're all on this call. Let's interact. Okay. Couple ones coming through, couple twos. Now, why I'm asking this question, for those of you who have a pension, you may be over the ages of 30. It's probably most likely. But the reason why I'm saying this to you is because in today's day and age, people ain't going to work in a job and saying, yeah, sure, put 10% or 20% of my money into some pot, because there's really no job security in today's day and age. And also, with that being said, we're quite in a, we're in a recession. People need money. People aren't holding down a job like what they used to. 10, 20 years, my dad had a job. People ain't holding a job for 10 months sometimes, let alone 10 years. So the reason why I'm saying this to you guys is because I need you to understand, when you look at investments into gold, into silver, into Bitcoin, this should be your pension. Investing into a machine, for example, that can pay you on a weekly basis, this should be your pension. When I told you guys at the start of this call, you could put 5K in a trading account and let the bot change it to 64K over 15 months. That is basically your pension. Putting money into Bitcoin and leaving it over 5 to 10 years, that's your pension. That's the mindset we need to have. We need to think about things over a longer term. It's very clear, guys, that over a longer term, you become more profitable. Okay, I told people inside my VIP channel to purchase NVIDIA. I told them to purchase this around $90 a share. We're up even more now. Where are we at? We're at 49%. Okay, so we're almost at 50%, just under 50% profit in terms of the increase, right? But look at this. This came out in 99, okay? From 99 to 2024, okay? You can see here, guys, you didn't need to really invest into NVIDIA until, let's say, 2016 or, really 2020, you could say, right? Over a 4-year period, look at the spike it's had. Things don't have these type of spikes over a day, over a week, over a month. Don't get me wrong, they sometimes do. But guess what? If you got involved in this when it had the spike over here and then you sold it, guess where it's at now? Just like with Bitcoin. Okay, I had over 34 Bitcoins, guys. But then guess what happened? I thought I was rich. I thought I could quit my job. I thought I could come legit and become a millionaire. And of course, I lost all my money, right? I lost all the money chasing a pipe dream when I didn't have the mindset to say, hey, why don't I hold this money here for a few more years? If it's jumped from 500 to 3 grand in this amount of time, what's it going to do when I'm 30? But at the time when I'm 21 or I'm 23, I ain't thinking about what the fuck's going on when I'm 30. Now I'm 31. Now I'm 31. Back then, I thought I'd be married, I'd have kids, I'd have this, I'd have that by 30. We all think these things, right? We think maybe by 25, we're going to have all these things. So we have to understand that it's really important, guys, to look at the longevity of things. So I'm trying to get you guys to understand that trading doesn't have to be an everyday thing. You don't have to always find a trade every single day. Sometimes the best trades take the longest time to be ready. So when we move into the next thing I'm going to show you guys here is the Japanese yen index. This is another shortcut. Add this to your watch list. Add this to your education. Okay. Add this to the notebook. JPY basket. Every currency has an index. The DXY is the US dollar index. The JPY basket, this is the Japanese yen index. This is going to tell me the strength or the weakness of the Japanese yen. If this goes down, that means the Japanese yen is weak, which means AUD JPY would go what? Yes, it would go up. Euro JPY would go what? Yes, it would go up. USD JPY would go what? Guess what? It would go up. Okay, we don't have any JPY pairs. It's just kind of US JPY, Euro JPY, AUD JPY. Okay, those are really the pairs I look at. Of course, we probably got some other ones, but these are the major ones that you guys need to pay attention to. Okay, Now, naturally, like with the DXY, you've got, Euro USD, you've got GBP USD, and you've got AUD USD, right? These are what we call majors, aren't they? Okay. So when we look at AUD USD, these are all a reflection on how the strength or the weakness is on the DXY. So essentially, with these here, Euro USD, GBP USD, and AUD USD, one of these currencies are what's the word? They're more connected to the strength and weakness of the actual DXY. Okay. And that is Euro USD. Euro USD is usually a spitting image of the opposite to what the DXY is showing you. So when you look at the DXY, look at this curve, look at this doji candle here, and then look at Euro USD. You see it come down, you see the doji candle. It's almost simultaneous, right? Symmetrical, sorry. You look at GBP USD, it's not the exact same. It's still, of course, showing you, something opposite, but hey, look at this. Okay. DXY is the last candle on Friday was bullish, or AUD was bullish as well. So we can see the DXY doesn't really have the same dominant strength as what it does on Euro USD as it has on, GBP USD and AUD USD. So when we have a look at the Japanese yen basket now, we've got AUD JPY, we've got Euro JPY, and we've got USD JPY. Euro JPY is the most correlated to the Japanese yen basket. So just like Euro, quite funny that just like how Euro USD is the strongest with the DXY, well, Euro JPY is the strongest with the Japanese yen basket as well. So be sure to add that to your watch list, guys, so you guys can just simply make your job easier. By me understanding the significance of this and having a look at the Japanese economy had a negative interest rate for over 25 years. Just this year, they said, hey, we're going to change the rate from being negative to positive, and that only could have a positive effect on its currency. Despite whatever the press was saying, the Japanese yen is this, is that, is this, is that. They was talking shit, but it's common sense here. If the rates are now starting to increase, this is going to have a positive effect for the currency. The currency is going to grow stronger. And because of that, whilst we was down here, we simply anticipated price pushing higher. I covered this on a few of my videos on YouTube. And that's the reason how we was able to get into this trade here, guys, and get over 1,600 pips with AUD JPY. This is unheard of. I tell you for free, there's no one inside your Telegram channel or on Instagram who can tell you that they're going to send you 1,600 pips on a single trade that's a currency like AUD JPY. We're not talking about gold. We're not talking about Bitcoin or a commodity or US 30. We're talking about a slow moving ass pair like AUD JPY. On the average day, let's see a daily candle here. On the average day, it's moving 120 pips. Okay. Look at these candles. Some of them are a lot smaller. Look at them. But we got in just at the right time when price started to stretch. The candles really started to open up. And we, of course, was able to gain the most out of this move. So it's important to understand that these things we're looking to repeat over and over and over again. But what do they take, guys? It takes time. It takes time for these things to happen. It takes time. It takes time. You have to be patient. The US dollar Mexican peso is a favorite pair that I like to trade. It can give you same results like gold in terms of the profit, but it's less manipulated because it's really just depending on the strength of the dollar. So if the dollar pushes up in terms of the DXY, this is going to go up. If the dollar comes down, this is going to come down. So it's really a nice pair to monitor because it's a nice swing trading pair that when I get into, I can hold for a number of days. For instance, if I buy it here on the 1st of August, 2024, you can see here by the 11th of September, so just over a month, or just under a month, excuse me, it gives me profit. But really from down here on the 1st of August to the 5th of August, so over a 4-day period, price moves up. And let me show you the pip count on this. The pip count says 17,870. So that would be 1,780. Okay, that would be 1,780 pips you're able to achieve with pairs that aren't the traditional ones. It's not the glamorous US 30 or the Euro USD moves. These are pairs that you should further look into investigating because Your job is not to trade what everyone else trades. I don't trade GBP, fucking JPY because I see it on Instagram or because I've seen it through some other guy's motivational video. I'm trading the pairs that's going to make it easy for me. I don't want to get into this business to make my job harder. I want to make my job easier. That's all I want to do. So to do that, I'm going to trade pairs that I know aren't just going to, because you have to understand, if I'm trading the US dollar and the Mexican peso, I now need to know what's going on inside of Mexico. That's what happens when you any currencies you're trading, Euro AUD. I need to be aware of what's happening with Europe and with Australia. If I'm trading GBP USD with Great Britain and with America, you have to be sure that you're tapping into these things. If you don't tap into them, guys, guess what's going to happen? You might be trading a pair one day and damn, the fucking Great British interest rate, the pound interest rate comes out and it fucks up your trade. The reason why that happens is because you wasn't aware. So when I look at the US dollar versus the Mexican peso, I know the Mexican economy doesn't have anything significant that's really going to move the markets. They're never going to disbalance the American dollar. It's not going to happen. The American dollar is the strongest currency, and the reason being is because it does the most international business. That is it in a nutshell. Okay. When we look at our devices, these iPhones, okay, the amount of money that Apple makes, that Apple produces on a monthly, daily basis, and then they convert that money into US dollars, it's a staggering amount of money. And because of that, and of course, other companies like Zoom, what we're on now, Netflix, Amazon, all these other brands, guys, okay, all these other brands that are, really, really, really prominent in terms of them being internationally based, Starbucks, Nike, Foot Locker, you name it, okay? The list is endless, really. McDonald's, Burger King, Pizza Hut, because of all these brands, it contributes to the strength of the US dollar. That is foreign exchange. It is not just us looking at the chart, deciding to buy something or deciding to sell something. So that is really one of the most important things I could really share with you guys is understanding that the levels of finance, the levels of financial literacy here is important. You don't have to go down a rabbit hole, but you just have to know the basics. Once you know the basics and you can put them together, you start to understand the bigger picture. So what I want to do now, guys, is just open up the Q&A. I want to just answer a few of your questions. I know I've gone into a lot of information here. Some of you might have a lot of questions. I'm going to go through the questions that I've seen so far. I see gold coming. I see gold going back down at the opening after the pivot point at 26.70 and a return to 25.80. What do you think? Let's have a look. I see gold going to 26.70 and a return. 26.70 and then coming down to 25.80. Okay, so I actually had here, that's a good question, bro. I had here a couple of possibilities that I thought could potentially happen here with gold. I thought we could either come down to 2600 here and push up, or we could come down lower to 25.30 and then push up. It seems like we've come close to to $2,600 and we're now pushing higher. You believe that gold could come up to 2670 and then come down. Let me have a look and see why you might say that. Let's put the magnet on. 2670. 2670. Where is that? 2670. Okay. So you think, let's change this color to green. All right. So you think gold is going to come to here. Okay. So basically what you're saying, bro, is you think gold will come up, grab the liquidity, all the money that's in this area, and then come down lower. It's a possibility that that could happen, bro. The reality is we don't want price to close above there. So if price does go up on the open, maybe it gaps up there. As long as it doesn't close up here, then it would be cool for us to still consider price to come down. Of course, the reason why technical analysis don't always pull through is because in times of economic uncertainty like now, commodities tend to do very well. So naturally, investors are buying gold. Naturally, central banks have announced that they're buying gold. They're buying gold. They're buying tons and tons and tons worth of gold. So this can always naturally mess up our technical analysis. So it's very interesting to have a look at what price does actually do. But I think in this case, it's best to react as opposed to trying to foresee something happening because, hey, there's more reason for gold to go. the only reason why gold should come down is because the liquidity is below, right? But when you think about it, the central banks, okay, the market movers, these guys have a a trading wallet so large that they can leave the money below for a number of years. They can come back to collect that money next week, next month, next year, next decade. So what isn't, of course, the most sensible thing to do is just continue pushing price higher and higher and higher and higher, because eventually what happens is, people like us make a lot of money by jumping on that train. But of course, the same thing, the flip side of that coin is, by them continuously pushing price higher, what is that doing? That's creating a lot of orders. People are getting involved in buying. People are saying, "Oh, look, it's still pushing. When it comes back down here, I'm going to buy it here because I'm going to hope it's going to push up." Right? So they are still collecting a lot of money on the upside to eventually one day just crash it down. So I would like to see gold come down, but if I have a look at the analysis that I made a couple of weeks ago that I shared on my channel, which was that, hey, look, none of these pullbacks are going to be sufficient unless we come down to around about the 25-30 handle. If we don't come down to there, I don't see any of these pullbacks as being sufficient. But at the same time, the market doesn't need to pull back. When we really look at the summary of what gold has been doing since last year, since 2022, gold has never really pulled back. It's never really pulled back. So why must we think now that gold is going to pull back? All the pullbacks it's had has been really shallow. So there's no real reason for us to sit here and think, hey, gold is definitely going to come down. If anything, there's more reason now why gold shouldn't come down against the reasons for it to come down. Because right now there's economic uncertainty, which means that investors, okay, let me clarify what I mean by economic uncertainty. Because there's a lot of war happening, multimillionaires, billionaires, trillionaires will move their money from countries that are not stable, and they will put their money into safe assets. An asset like gold can't lose their money. It only appreciates in value. Gold over a 10-year, 20-year, 30-year period, for example, okay, it's just like a chart. Like, it's the chart. Gold over a 20-year period is just this. It's just going up. It's never had a year where gold was down. The next year, gold was even lower and even lower. That doesn't happen with gold. So investors will understand, hey, look, anytime there's, fuckeries taking place in the world, let me move my money from here, put it over here, and just wait for things to cool down. Once things cools down, I'll take my money out of gold and I'll put it back over there. So right now we're dealing with a lot of, investors, and guys, I could be a multi-millionaire who owns a hedge fund, and I could just be someone that I've made all this money by myself, and now I want to make a hedge fund. What do I mean by that? I mean, I don't have any information from no insider trading, no market makers, no financial institutions. It's just me, right? It's just me by myself taking all this money that I've made and now making a hedge fund, taking all your money and saying, cool, we're going to build a hedge fund, right? So I need you to understand, people like me are the ones that the market makers also want to eat. They want to eat me as well. So we can't also ignore the fact that people like me, okay, who could potentially build a hedge fund here, are also the ones that are contributing to the strength of gold pushing up, because these ones are also buying gold as well. So eventually people are going to get burned, and it does need to come down, but we can't, it's too early to say that it's going to come down now. Even if it does grab this liquidity area here, really and truly what's happening is we're just reaccumulating. There's nothing about this chart that shows us that we're ready to come down lower. We could say price here, you could say this low here closed beneath this low, but really in the grand scheme of things, maybe we're looking at it wrongly. Maybe we say it goes up, higher high, higher low. Okay, it goes up here, higher high, higher low. Maybe that now pushes up for a new higher high. That just might be the way that we have to look at it, guys. I think any shorts are short-lived in terms of trading gold right now, and that's just based off the fact that we can't rest easily knowing that gold is going to come down. Of course, I'll be updating you guys inside of my community and sharing with you guys any trades or any outlooks I have in terms of me potentially taking any positions on gold. But for the moment, especially on Monday, I'm just going to sit on the sidelines and just let this play out. Let's go to the next question. Where can we buy silver? I've answered that already. But since silver is much less rare, won't that pose a problem when it comes to mounting it? But since silver is much less rare, won't that pose a problem when it comes to mounting it? Not at all. You have to remember, silver is a commodity. It is an asset that at the end of the day serves a public use. Okay, it goes into lithium batteries, it goes into weapons that are used all over the world, it goes into many different things. Silver and gold were currencies that were used before fiat currency even came into existence. So all I'm simply saying to you guys is, if you purchase some silver, if you purchase some gold, let's stick to silver right now because it's more affordable. If we purchase some silver, hey, at the very least, you're going to make your money back. That's what I'm saying to you. At the very least, you're going to make your money back. That is the reason why you need to be purchasing it. Because guess what? In 10 years' time, $30 isn't going to be worth $30. If you put £30 down right now and you come back to that £30 in 5 years' time, you'll still have £30, but the world around us is going to mean that that £30 isn't the same value. When I was young, I could go to the shop and buy penny sweets. Some of you here don't even know what that feels like. I could go into the shop with 5p and I could buy a penny sweet. I could buy Haribo's sugary sweets, 1 penny a sweet. You can't do that now. That doesn't exist. So that's because of inflation. Okay. So what I'm saying to you guys is silver is going to at least be able to hold you guys value of your money so that you're not feeling the pinch. Do you use FX Blue? Never heard of FX Blue, a site that I used to get some info on the market. What site I do use is Finviz. I will share that with you guys. Finviz.com is an amazing website to use. This website here, it will share with you guys market information regarding everything financial. You can see here a heat map chart to see, of course, what sectors are performing poorly or which ones are doing good. You can see all the companies, all the tickers. But I just go into news. I go into news here and I simply read a few articles. I read a few articles a day. Let's say, for example, I'm waiting for the stock market to open. Try to read 5 to 10 a day. And if you're that lazy, just read one. But the more I read, the more I know what the fuck is happening. That is the point I'm trying to tell you here. The more I read, the more I know what is happening. The more I know what's happening, the more I know where my head's at. The more I know, okay, cool, I should be looking at buying this or I should be looking at selling this. Some of the information I read serves me no purpose in the present moment. But weeks down the line, that information that I read then comes back and it reminds me, hey, look, I read this. That makes sense. Okay, I get it. This is a part of the puzzle. And now I've concluded the answer. Okay, guys. So yeah, finviz.com. finviz.com. Some more questions. Cavell, how do you change the percentages on the fib retracement tool? Okay, cool. So let's go on the fib here. Double click, go to settings. Now you can see here, it says down here, it says it here. Where is it? Percent. Change the percent. Yours will probably say values. Okay. So change it from because you said how do you change the percentages on the fib? Yeah. So it says here on the levels, change from values to percent. Okay. Screenshot this, guys. Just screenshot my settings and you'll have it the exact same as yours. It's that simple. Someone says, hey, could you do a demo trade marking up your swing trade high and low, then marking your initial structure and where your entry points would be at all? Okay, so to do that, bro, a demo trade, you mean like, can I mark out a trade right now on the screen here as opposed to actually placing the trade because the markets are closed right now? Could you do a demo trade marking up your swing high, swing low, then marking your initial, then marking your internal structure and where your entry points would be? Okay, cool. Let's do that for you, Shay. To do that, I need to obviously find a trade. Yeah. Sweet, bro. To do that, I need to find a trade. But let's just say we found one here. Okay, let's go for the peso. Okay. All right, so first things first, what I'm going to do always is I'm going to look at the line graph. Okay, and on the line graph shows me that in actual fact, we're bullish right now, okay? Because of course, we had the previous lower highs, which price has broken above. So we're bullish times 1 here, bullish times 2 here, bullish times 3, bullish times 4, bullish times 5. So we're quite bullish. And now we're in an area where we would want to buy from. Now, naturally, because we know this is broken the structure level at the top here, some of you, what you would probably do is you would mark out, let's take this magnetic tool off. You would mark out this low here and you would extend the high, but you wait for this to pull back. Okay. That is cool, guys. But sometimes you have to look at the bigger picture and what's actually happening. And you have to think about what's realistic. If you're never getting a pullback here, I'm not just going to continue extending my fib higher and higher and higher, because sometimes you'll have your fib up here and then it's like, okay, so I'm going to wait maybe a year for price to come all the way back down to this low here. It's not realistic. Okay. So off of the line graph, what I'm going to do is I'm going to see here on a candle chart, pardon me, how the wicks are. The wicks are kind of the same as where the line graph is. I'm going to come up here, this low to high, okay? And what I'm going to do is zoom in now. And I can see areas where I would want to buy from now. I've kind of already got this area marked out, which is this line here. But let's just put this line here like that, okay? Now I'm going to draw a zonal box just so I can remove this fib and come back to it. The zonal box that I'm going to mark out is just going to cover the areas where I would enter a trade. So I'm going to call these areas my kill zone. It's going to cover the 62% down to the 88.6. Reason why I'm going to do that is because I can now remove my Fibonacci so that the chart is looking a bit more clearer. Okay. The next thing I want to do, you guys can see here, and for those of you who have been on my previous calls, the baby blue lines represent weekly significant structure levels. Okay. Now, off of the weekly time frame, I'm going to go across to here and I'm going to look for 3 points or more. 3 points or more is going to show me a significant level of structure. Okay. Or let's just say a level of structure. And then I'm going to show you what makes it a significant one. So 3 points, I'm going to mark this level here. Let's change it. I ain't got none. Cool. Now, 3 points. 1, 2. I've got 2 points here. This one is really close. This one is bang on the money. Okay. 1, 2, 3 to the 4. Snoop Doggy Dogg and Warren G at your dough. Now, when we go onto the candle chart, chances are that these lines here may actually have wicks that would touch our line graph, which would further support the indication of this structure level being significant. And what do we have, ladies and gentlemen? We have the exact same thing. Now, of course, this is done live, so you guys can see this is, real time. Oh, let's just remove that. So this ain't no art attack. This is not what I made earlier. This is just simply where we're currently at right now. Okay. What we can see here, I'm going to draw attention to these areas just so you guys can see it for yourself. Maybe these ones here, maybe price comes up here, maybe it doesn't. Okay. These ones, it doesn't come up, which is fine. But for these other ones, one here, we get other touches. Now, if we can find a structure level giving us 3 touches or more, I'm telling you for a fact, on a weekly time frame, this is a significant level of structure, because if we can find 3 touches, you will definitely find more. It's a fact. It's a given, and I've just proven it to you. Even when price is nowhere near, I'm pointing to the screen like you guys can see it. Even when price is, nowhere near your structure level, you will most likely find on the candle chart wicks coming up, reaching your structure level. And that's because that level is a significant price point as to where price needs to go in order for it to react. So now that I've found this significant structure level, I'm going to go back and I'm going to see how that matches up to where price is currently at the moment. Now, that matches up pretty good because what it shows us actually is, price came to that area and turned around. I'm going to move this out of the way for now. It's in the way. Price came to this area, it turned around, it came down. Now, if we could find a level in here, I'm just going to draw a level right here. Okay. I'm going to draw one there. We've got 2 touches. I'm looking for a third, obviously, but I'm drawing it here now because I want to look to the to the left, see if I can find price reacting off of this level. Usually it should be the other way around, but for the purpose of, trying to get through this example, I'm going to just do it back to front. And we can see here we get a third touch, which just means we probably get a lot more touches as well. We can see a touch in there. We can see one's just coming over a slight bit, but nonetheless, we know that we've got touches. Okay, touches in here, a touch here, touches over here. So now we've highlighted our significant levels of structure. We now know that there is a big possibility, guys, that guess what? When price comes down to this level, we could get price turn around and push higher. Now, in this actual fact, we don't want price to turn around off of that level. Well, we would want price to do that, but we kind of have already identified that, hey, inside of this area is our kill zone. So we really want price to come down, like what I've drawn out with this red line, which really shows you guys that, the things I'm saying to you guys kind of checks out, because this red line was drawn without this box being there. But this box represents our Fibonacci. So we want price to come down into this area. The lower it comes down, the better it is for us to take the buy, right? Of course, price could just come to this level and push up. So we do have to be prepared for that. And this is where you have to make a decision. This is where you have to have what we call confluences, and to say, hey, how many confirmations do I have that's going to give me reason to buy off of this level as opposed to buying lower? Well, if price does come lower, I'm not saying that I want price to close down here. I don't. I don't want price to close down here. What I do want is price just to wick down here and then push higher. Okay. And what we can see here is we've got an equal low inside of this area, which means there's liquidity there. Based on there being liquidity in this area, this would add to the reason why it would be valuable for price to come down, grab liquidity. There's also some imbalance here. Price could come down, react off of this imbalance, and push higher. So what I would be doing with this as a swing trade is I would find an area that I'd feel comfortable buying from. And because I've got the structure level there, what I'm going to do is by using a long position, I'm going to show you guys, if I decide to buy from the structural level, my stop loss needs to cover this zone. It needs to cover the zone. Okay. Of course, if I'm buying this, remember the Fibonacci is showing me this is where I would be, buying from, but my first take profit target is going to be the minus 14%, which means it's going to be up here. 14% is going to be up here somewhere. Okay. So we already know the risk to reward ratio is going to be great, providing it pays off for us. But at the same time, we can't ignore the fact that, hey, maybe price is pulling back. So whether I decide to place my buy here or place it lower, I need to, of course, be wary of the fact that, hey, if I get it wrong from this area, price could come down to this area here, which I've also got previously marked out because of why. This is also another significant level of structure. Just because I've marked this level doesn't mean price is going to respond to what I want it to do. So this could be the area that I buy from inside of this gray zone here. And of course, it just means I need to cover my Fibonacci area. So I would do this. This would be my buy position. If I didn't want to look at the chart on a daily basis and revisit and see where we're at, because if you're asking me how I would take this trade, I wouldn't place a buy limit. I would wait to see market data to see what's happening, to see if we can clear the low. If we clear the low, second we clear this low, I'm like, okay, cool. Let me see how this daily candle closes. Then I'm going to look to get into a trade. So really and truly, I would want to buy from, around about here, right in between here, this imbalance gap here. I would kind of want to buy from there so I could decrease my stop loss and really give the profit the best chance of it actually showing me more of a return. So that would be my setup. Next question. Hope that helps you, Shay. Salam, bro. In regards to VIP, how much is the subscription? Also, with patience, would you say the bot is the first step to financial freedom? So the VIP channel is £199 a month. Okay. The reason why I charge £199 a month is because I sit here and I say, hey, if I'm going to give you guys trades that's going to make you money, it better be worth my time. I'm not going to sit here and tell you guys, sign up to my broker, click this link, do this, do that. I don't care about that. I'm not trying to make money out of you apart from the money that you're agreeing to pay me, which is £199. For any of you on this call today, I'll tell you that you can get it for £99, half price. The amount of money you pay doesn't make a difference. What it does do, though, is it creates a financial commitment to say, hey, I need to take this serious. Let me lock in. How many times have you guys spent £99 and said, it's only £99? But spending £199, like, oh, yo, I just put £200 into this. This needs to work. Let me tap in. Let me actually see what's going on. So that's the reason behind it. The bot, look, the bot does amazing numbers, guys. I don't need to sugarcoat it. I've got a bot channel. There's reviews. There's people that are genuinely just as concerned as you guys are, and they're turning around saying, hey, I'm going to take the leap of faith. And then they take the leap of faith, and then they create a testimonial video, which maybe for you guys is too good to be true. Because I was once a guy like you guys as well, saying it's too good to be true. But eventually I realized one day, hey, Cavell, all of these people can't be lying. Someone's got to be telling the truth. I'm seeing all these videos on YouTube, these guys driving this car, that car. I'm thinking to myself, one of these guys probably owns that car. If I keep sitting there telling myself that no one owns it, that it's all a scam, well, the only scam here is me believing that. So yes, of course, the bot is going to put you in a position of doing the work for you so that you don't have to. It's going to take the stress out of you needing to trade every single day. Guys, the bot places trades in your sleep. You wake up making money. If anyone's on this channel, on this chat, excuse me, and if anyone's in this call and they've used the bot or they have the bot, share your experience. That would help. What is the bot? The bot is artificial intelligence. It's AI. It's an automated machine that will place the trades for you guys in your sleep. You turn the trade, you turn the bot on, you turn it off. The bot does what most people dream of, which is executing trades amazingly. What I will do is I will share with you guys just very briefly results from what the bot does. Okay. How do I do that? Let's share the screen, share the Telegram. Cool. You guys can see the Telegram. Okay. Look here. I'm going to show you guys from the bottom upwards, 8.968% effectively in 4 nights. Okay. This guy is basically saying to you, look, he's made, I don't know if you guys can see that. Is it big enough? I don't know. Maybe it is, maybe it's not. Okay. But you can see it says he's made 9% basically in 4 nights. Okay. This guy's made £6,000. Okay. Someone else has made here £22. Someone's made £31. Someone's made £400. Someone's made another 22. Someone's made, what's that, 850. Someone's made 110. Okay. You can see this person here, they've actually tried the bot with different currency pairs. So they've tried it with USD JPY, Euro JPY. They tried it with USD JPY and Euro JPY. Okay. But they've still made £110. They've still made £110, guys, in their sleep. Kyle's made 765 quid. This person's made 3% overnight. Doesn't matter if it's a small account or not. He's made £11, but that's 3% of his account balance. If you had 10 grand in an account and you've made 3%, guys, look, let me just be transparent with you. Yeah. There's 532 messages in here. Do the maths. I can keep scrolling. Let me just look randomly. Okay. Where is this? This has gone back. Where is this now? 120. It's 8th of October. Let's keep going, man. Let's keep going. Look, let's go up. Let's go to August. Okay. August, small risk last night, but £260. Okay. Scroll down from here, £5. Like, everyone's just making money, guys. It doesn't really matter how much people are making, because obviously everyone's got a different account size. But the purpose is that the machine is creating money. It is printing for them. This bot is just too sick. So yeah, we're gonna get back to the session. Someone said here, my first withdrawal, what a mad feeling, mixed emotions, as it doesn't feel real, but it is. Then I've got emotions of just wanting to earn to make it back, thanks to Vel. Okay, so yeah, guys, the bot does what it says on the tin, man. I'm not here to sell you guys a dream. These are people that were just like you, who contemplated it, and it costs money. The bot ain't cheap. It's not free, of course. But guess what? What machine do you know out there in the world that can make you money on a daily basis that you're going to get for free? So yeah, guys. Going back over to your questions. A first step to printing money, bro, patience and resilience. He mentioned earlier. Okay, yeah, cool. Thank you. What else do we have here? That's why 70-year-old Karens go back to stacking shelves at Tesco's. No, it's true. The harsh reality is people are unfortunately working until they can't physically move. People are working until they're 65, 70 years old because they don't have enough money, guys. Which index works best for AUD JPY? I told you that, my bro. It's the JPY basket. Did you say that if the USD goes up, Mexican peso also goes up? Yeah, if the DXY goes up, USD Mexican peso will go up. Euro JPY, can you explain this trade you've called out? What's better to invest, gold or silver right now? Silver. How much to join a VIP? I've mentioned money day. Can you do a bot webinar when you got the time? Have you thought about doing a bot on a monthly subscription? No, I haven't thought about doing a bot on a monthly subscription, to be honest with you. I don't want to sit around. It sounds harsh, guys, but I'm not trying to sit around and talk with people on a daily basis and then be like, hey, you didn't make your monthly payments. Like, no, I don't care about that shit. If you want it, you can take it. If you don't, you don't have to take it. Like, I'm not forcing you. I'm not one of these guys that will tell you, take it. And no, I'm not even going to tell you to try it before you buy it. No, if you don't want it, you don't want it. It's just as simple as that. You can see what it's doing for other people. That's it. You either want it or you don't. So yeah, the monthly subscriptions thing, I just think it would be too complicated and it's too much hassle, if I'm honest with you. I'll do a bot webinar. I'll probably try and do one throughout the week. I guess I'll try and do one. Someone asked a question about explaining my Euro JPY trade. Whoa, cracking on for time now, man. Euro JPY trade. Where was that? When did I call out that trade here? Euro JPY. I called it out during the week. I'll tell you what, though, this is coming down. I'll tell you it for free right now. I don't think I'm going to go into that because I can't even find the position on here. I know I called it out, but I think I called it out on my other trading view account, so I don't have the buy position. I'm sorry. I'll do a video, though. I will do a video and I'll upload it for you guys. But this is coming down, okay? Euro JPY, I called out a buy. What am I talking about? I remember. Sorry, guys. I called out a buy. Yeah. I called out a buy for this. We're currently sitting in this buy currently at the moment. I don't know why the buy position's not there. Why is it not there? I don't know why it's not there. But yeah, I called out a buy for this. It could come down. Looking at how the candles have closed, it could come down before it pushes up. It might be something that we have to exercise more patience with, but it may come down. This green level here is an institutional level that I have. Similar to like structure levels, these are areas where price tends to respond very strongly from. So the reason why I looked at a glance and said, hey, this is coming down, is because these are areas where I would expect to see, movements from, and the formation of the candles kind of show us that same kind of bearish outlook. But the higher time frames, they show us more more bullish price action. So swing trading, the art of swing trading is being patient. Sometimes you're in trades that look like they're not going to go your way, and they turn out to be some of the best trades you're in. Realistically, when I'm looking at Euro JPY, to explain to you guys, who's drawing on the screen, man? Come on, louder. When we're looking at the higher time frame here, guys, the higher time frame shows us that we push down into this monthly candle, and now we could be pushing higher. When I look at Euro JPY, when I look at the Japanese yen bot, whoever drew that on my screen, remove that, or I'm going to remove you. It's that simple. The JPY basket, the Japanese yen looks like it's going to come down, guys. Okay. So if the Japanese yen comes down, then that means Euro JPY will go up. Okay. Euro JPY will go up. Who's drawing? Wilfred. You're gone, my boy. Let me just remove you. Take care. All the best. Goodbye. Yeah, cool. All right, let's I don't know how to get this stuff off the screen now. That's annoying, man. People just come and just mess up shit. I don't know how to do it. Clear. Okay, cool. Yeah. So yeah, if the Japanese yen weakens, I think it could push down towards at least, coming towards this imbalance fill here, this gap down here. If it does come down, it's going to further support Euro JPY pushing up towards this gap, which is also going to be this weekly structure level. So I'm looking at this from a higher time frame and saying, okay, this might not be pretty over a daily basis, but I think over a weekly basis or a couple of weeks, we could probably reclimb back up towards the heights of 167. So Euro JPY is actually going to be something I'm looking at off of the daily time frame. I'm not looking at this off of a hourly time frame, because the trade is not based off of an hourly time frame. The trade is based off of a daily and a weekly perspective. So I want to be patient with this, guys, to see how it plays out. Can I trade the bot on funded accounts? Yes, you can trade the bot on funded accounts. The bot is passing FTMO accounts. It passes FTMO accounts. That's probably the safest funded program that you guys want to use right now, FTMO. So it can trade with FTMO. Do I need to configure the bot daily, or is it set and forget? No, so I will provide you guys with inputs on a daily basis, and you just copy the inputs. You don't have to, but you can if you want to, you know. So I give you guys information. The bot trades usually throughout consolidated periods. That's the best time to use the bot. So no, the bot shouldn't trade news. Mainly the bot trades throughout the night, which is the Asian session. There's not really any news throughout the Asian session. So yeah, the bot doesn't need, no bot can trade the news. Because you don't know what's going to happen. So no, it doesn't trade the news. If the yen index shows it's going down, how do you know when currency pairs will follow that trend? Or would you have, or would you then have to keep checking your technical analysis? If the yen index shows it's going down, so if the yen index is coming down, okay, let's go on like an hourly chart to show you here, okay? If it's coming down like over here, okay, when you're looking on Euro JPY, your JPY has gone up on the same formation. Okay. Of course, you need to have some technical analysis to support everything. We're not just looking at one thing saying, hey, this is going up. Okay, I'm going to sell it or I'm going to buy it. Because if I sell it or I buy Euro JPY, I need to know where I'm selling to or where I'm buying to. So, based off of that, it's important to have your own technical analysis so that you can understand exactly what destinations or what reasons you're going to buy. I don't just buy because I see something, I look at variable things and I add them together. But ultimately, the yen index is the strength of the yen. So if this is up, hey, the yen's going to be strong. If this is weak, the yen's going to be weak. Okay. Euro JPY is going to be the strongest correlated pair towards the yen index. Okay. Yeah, that's the last question. So the bot, how much to buy? I guess you're talking about the bot. So the last client, Kyle, for the testimonial review, if you guys haven't seen it, I'll upload it again. He paid £4,800 for the bot. He's now making £700 a day. I'll say to you guys, just like what I told you with the signals, if anyone's here on this call right now, you get the bot for half price, £2,400. And that's just simply because I can. Okay. If there's not any more questions, guys, I'm probably going to wrap it up. This has been a lengthy call. I've appreciated you guys interacting with me. I hope I've been able to share with you guys a ton of valuable information. And for any of you who are interested in maybe taking things further with either the mentoring, education, the signals, or the bot, whatever it may be, whatever questions you may have, whatever concerns you may have, just pop me a message. You've got my private Telegram channel. Pop me a message on my Telegram. I'll be sure to respond accordingly. And yeah, I hope this call has been, beneficial for you guys. I've got a YouTube channel called Learn with Vel. Subscribe if you guys haven't already. I tend to drop a lot of educational videos on there. And of course, I like to do what you guys need. So if you guys need to see more videos of specific things, let me know, and I'll be sure to share that information with you guys. So yeah, look, it's 1 a.m. 1 a.m. here in Dubai. For those of you watching online, be sure to like and subscribe. You know the vibes. It's lit side. Hope you guys have a wonderful evening. Always remember that every day is money day. Peace, guys.